Okay, this is the wrap-up for the live market open for Tuesday, May 10th. We've seen yen weakness as one of the biggest features in markets this week. Speculation and intervention, perhaps also real intervention after the tide has turned in favor of the US dollar. They're taking advantage of this. Positive mood in Asian markets is, of course, going hand in hand with yen weakness, higher Nikkei, higher dollar yen. Okay, in other commodities, it's relatively, well, not so good. Canadian oil production stabilizes. We've heard from Shell that they'll be resuming production at low levels. Authorities in Canada and Alberta have managed to stabilize the situation. Fires are still going on, but it seems that the worst, at least, is behind us, at least in terms of what's going on in production. And elsewhere, there's just too much oil. Oil prices are lower, other commodity prices are lower, and commodity currencies are feeling the heat. In Europe, we had some happy, smiling faces about beginning to talk about the debt and getting closer to an agreement. I see this as a kick the can down the road exercise. Remember that the ministers of the Eurozone have their eyes open for what's going on in the UK, the EU referendum, another debate which is also heating up, speeches by various people on the campaign trail. Prime Minister David Cameron was speaking yesterday, talking about the importance of the EU for peace. He was, of course, criticized for that, for scaremongering, warmongering. And there's a debate about access to single market. Anyway, the campaign is in full swing. Opinion polls are still mixed. Okay, other figures we had yesterday were quite minor, at least from China. We did not have further disappointments after the weak trade balance figures. Things were actually okay. The charts, if we begin from the top, from euro-dollar, little movement here. Lots of frustration in euro-dollar, very narrow range. The hopeful range is 113.35 to 114.10. 114.60 is much stronger resistance, followed by 115. But so far, we're sort of waiting for the next big move in euro-dollar. Pound dollar is generally under pressure, trying to make a recovery. We might see lots of action later this morning with the UK trade balance. The trade balance in the UK has been negative, has been worse than expected in quite a few months. Now it's expected to improve, a squeeze in the trade balance deficit. Let's wait and see if how things are going. 144.23 is the current level. 144.40 resistance, followed by 145.10, support at 143.70. Dollar yen, as I said, the big story, getting closer, just missing 6 pips to reach the round 109 level, which is resistance, even stronger resistance at 110. Support awaits at 107.65, followed by 106.10. Speculation of intervention is weighing. Okay. Dollar CAD feeling the lower oil prices and lower production in Canada. At the moment, we're seeing some bounce back. 129.30 is support, 130 is resistance, followed by 130.80. Further support, 128.30. The Australian dollar, 73.40. The range is 72.80 to 73.75. We reached the round number of 73 so far. Commodity prices are lower. Again, we're seeing some kind of a bounce this morning, but I still see the trend is going against the Aussie. The Kiwi dollar did lots of catch up with the Australian dollar on speculation that the RBNZ will follow the RBA, that also New Zealand will get rate cuts. Yeah, and the focus, events we have today are, we had already the German industrial output, which missed expectations. UK trade balance expected to show an improvement. Watch out for the sensitive pound. The US JOLTS job openings report is important for the Fed, but we've seen it move markets less and less in recent months. Watch out not only for the level of job openings, but for the level of quits as an indicator for confidence, okay? More quits, more people quitting their job, more confidence. But again, it's not such a big market mover. Perhaps the biggest market mover is at night. The financial stability report from New Zealand with an accompanying press conference. The RBNZ, Graham Wheeler might hit the Kiwi on the head, hit the Kiwi when it's down, with hinting about rate cuts. Okay, so that's basically the wrap up for today. I see we have a few questions. We had, does the Bank of England prefer a stronger, weak pound? We've seen that the level of the exchange rate, they prefer a weaker pound in order to see inflation higher, but the impact of the exchange rate on inflation, on the economy, has not been so strong in the UK as in other countries. So it's not that important. But of course, the pound moves by the economic situation, by the speculation of Brexit, and by the speculation of a change in interest rates. I mean, of course, all central banks probably would like to see, at the moment, weaker exchange rates in order to see higher inflation and more attractive exports. But there are countries where it's more important and countries where it's less important. In the UK, it's less important. Yeah, it's like summer trading come early for the euro. Yeah, it came early, but I think it's going to be a hot summer anyway. With the euro, we had long periods like this, and then things tended to blow up, especially with all the political issues going on and speculation about more action by the ECB. Lucas says on my watch list for the RBNZ, Kiwi yen below 72.75, nothing to stop it until 70. Yeah, let's share your chart before we go with everybody else. Yeah, here we are. Yeah, it seems to be clinging onto support right now. Quite a battle with support, very stubborn support line. Also worked as support beforehand on Kiwi yen. So yeah, if the RBNZ hits it hard, there's lots of scope to the downside. Okay, so that's a nice chart as well. We'll be looking tomorrow at the impact of the New Zealand dollar on Kiwi dollar and also on Kiwi yen. Okay, so yeah, so thank you very much everybody for coming. I wish everybody a safe and successful day at the markets. And as always, we'll be here tomorrow. So that's it. Thank you and bye-bye.